Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. The company we're talking about on this episode is Gilead Sciences. That's ticker symbol GILD. This biotech stock is up 2% this morning after they received an upgrade from Raymond James, who say they upgraded the company because Gilead has two strong drug candidates in the pipeline that could provide significant revenue growth over the next 5 years. Now, my research shows that one of those drugs has to do with HIV prevention, and the other I'm still in the process of finding out. Still, what we're here to do is talk about how healthy this company is, and is their stock really worth the price of admission. It's important first to mention that Gilead has underperformed the S&P 500 over the past 5 years, so speculation about their next 5 years being better would be suggesting a turnaround for the company fundamentally. They generate tons of free cash flow and they don't have a lot of debt, so these latest developments could be most certainly what the doctor ordered. Their earnings are projected to more than double over the next 12 months, but be more stable in the mid-single digits over the next 5 years. Their growth fits right in line with the generic drug industry, but will be slower than what we expect in biotech. Investors will be able to enjoy a healthy 4.5% dividend yield, which should be well covered as the company converts over 28% of their revenue into free cash flow. I also believe, based on present value of growth opportunities, Gilead is likely to increase that dividend over the next 5 years. Overall, when we include share buybacks, investors have enjoyed a 5.7% shareholder yield over the past 12 months. Looking forward, investors who purchase today will see an operating earnings yield of 12.6%, which is better than 92% of all companies. My valuation suggests Gilead has a 37% upside to fair value, which I believe is $91.54. The average analyst target is 24% above the current price, so their estimates don't fall far behind. Long story short, I will be picking up some shares of Gilead Sciences to buy and hold, but traders who are willing to take a long-term opportunity into 2025 or 2026 could see a 30 to 40% return and take their exit. I do believe the company is mispriced and carrying a lot of value heading into an economic slowdown where healthcare stocks tend to be in high demand. I think sooner over later, they generate some positive returns for investors and also for traders who have the patience to hold on to their position. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.